everyone, this is my Sunday market breakdown for next week. These are the pairs I have on watch, so Euro Kiwi, Aussie dollar, Euro dollar, pound CAD, Aussie CAD, pound dollar, and then my additionals, Euro Aussie, pound yen, pound Swiss, wheat, which I think looks quite nice on the weekly, and pound Aussie. So yeah, starting with the DXY. So we got decent momentum middle of the way through last week. But then we started to get this little bit of a pullback. And I'm still kind of seeing this as like a potential just larger pullback, like sort of style, to move higher, to eventually take out these highs. Because if you look at the way it's trending, I know I'm on the 4 area, but you can kind of see, you've got this push up flag, just creates this larger pullback, which is this. Then we get the push up, and you can kind of see this is your flag as well. And we push up, and now we're just kind of pulling back creatively, potentially into these areas, so we could come a little bit lower before we get that larger push up. But then, as you can see here, this is just like your impulse, your larger trend impulse, larger trend to continue to the upside until we take out this high. So that's kind of what I've got in mind in terms for the DXY. The daily, not looking too, it's not looking the best, but there are two key areas that I'm looking for now. So I'm looking for price to potentially come into this low, and maybe a little bit earlier we could tap into this low and then move. But I feel like if we do move from this low here and start moving to the upside, I feel like it could be a sort of fake out to then come back into here, and you kind of get that 1, 2, 3, and then we can get long from there. So that is my plan for the DXY. And then, starting with Euro Kiwi. So I think this looks really, really nice. If you go onto the weekly, this one we got a very, very heavy bearish breakout of this build up of volume here. So that's really, really nice. Didn't reject off anything very significant or anything really. There's nothing here that is kind of tapped into, but you can kind of see that it had this 1, 2, 3 element push down. We've had our first continuation. We're trading below these lows, and now we're looking for that second continuation to play down to these lows and potentially down to these lows. Simple as that. So when I drop down to the 4 hour, so let's just mark on our lows so that we know 100% that we are trading well below now these lows, and the next significant area really is there. So we've got this a lot of room to play with. And what do we see here? Well, first off, we've had our hook point, which we can see here. So that is our reference point. That is the high that we want to look for price to come back to, so we can look for the short. So that's what I'm looking for. There are two things I'll be looking for. We either push up, near miss it, and we get a bit of a middle section, and then we push up, and then we get that 1, 2, 3, which I will risk entry 100%. I'll look for a 1 hour, potentially 15-minute risk entry. Easy to protect because this was very impulsive, so all you need to do is protect against that hook point. So you could probably get in with a 20 pip stop, nice and easy. That gives you 5 to the 1 to the low there, and first target being just under 9%, so very, very nice. Second one, which I think would probably give you a bit more risk reward, is we just end up pulling back quite sharply. We kind of break above that little area. I wouldn't be looking to risk entry this, so I would wait for the push down, sign from the market, small continuation below the hook point. So we've broken this, we've pushed back down, small continuation, looking for it on the 15-minute, and you'd be able to get in. If you're able to get in with a risk entry, then you're obviously going to get a much tighter stop. So you could probably get away with, let's be a little bit more conservative and be, say, about 12 pip, and then that gives you, let's say, anywhere around here it's about 7%, and then to the first target at the low, you're then looking at around 13%. So it gives you a little bit more room, but obviously both positions are very, very nice positions. So that's what I'm looking for on Euro Kiwi. Aussie dollar. I do slightly prefer Aussie dollar over euro dollar and pound dollar, just because if I show you on the high time frame, so we're kind of in between this larger daily range here, where you could probably call it a weekly range actually, and we're in the middle of it, and you can kind of see that we've got this element of an expanding to it. So what I'm looking for here is, when I drop down to the 4-hour, there's kind of two things that there's something that I've noticed that I like about Aussie dollar, and that's how it's trending on this move up. So I can see here that we've pulled back quite sharply, and then we've come back up, and then we've kind of retested this area before we moved up again, and that's exactly what's happening again. So we've got the retest of this area, and now we've already retested this area. So technically, this, like these two runs here, could just break above this before it starts to turn around and potentially retests that area to obviously eventually move out to take those highs. So with that being the case, so if I just drop down to the 1-hour now, can I position myself within here to mitigate as much risk as possible and play a position to here and potentially the breakout? And is the risk reward worth it? Well, I can already see here that we have retested that area. Ideally, yes, we could move up, and then you get something like this, and then you get your continuation there, and it just becomes a large two-touch, and that is more of a retest of that area. But technically, we have retested the area, so I would look for something like this, but it'd have to be very deliberate, and it's quite a larger. But if we push down and we get that middle section as such, you can kind of see a little bit of depth in there, and you've got a 1, 2, 3, and it gives you an entry here, and you can get in with a risk entry, and you can probably easily get in with a 10 pip stop. Yeah, you can. Then I'll be looking to play that, because it gives you 3 to 1 to the high, and you can manage it you've got 1% within the structure, just in case this ends up just kind of being that area before it actually pulls down into those lows and gives you the continuation there, which is obviously what I would also look for if this doesn't play out. But that's kind of like a slightly higher risk position, just because, I mean, the flag is in proportion to the impulse that it has come from as well. Like we're in the 50% fib range, so it's absolutely fine to take. But it is a little bit cautious that we do have this hook point here, and we have tapped into it, so it would have to be a deliberate structure that I'm looking for in order for me to take that position. So yeah, that's how I would look for the longs. Either that, or we get a breakout of the highs above. So what I mean by that is, if we continue to impulse and then you get a small 1-hour flag above there, then you can take that. And then on the other side, because we have tapped into this area now, here, you can also look for the short. So what I'll be looking for with that is just a very clear break of this low. So yeah, just more of a, maybe we get some small continuations here, and then we get the break of the low, and then you get the larger continuation, something like that. Then I would be happy to look for the short. So that's Aussie dollar. Euro dollar. Now you can kind of see this as you've got this kind of descending nature to it. We have tapped into this high, which, as we know, we sold off pretty aggressively last time, so that's a positive. But on the flip side, we have tapped into this area, and we have started to move with some decent momentum at the back end of last week, especially you can see on that weekly candle. So how are we looking to take this? Well, similar to Aussie dollar, I'm looking for two things. I'm not really looking for the long as such in here, just because Aussie dollar's kind of got that extra confluence on here, where it's retesting the back end of this, but we have left a big gap to that area. So I'm not looking for the long what I'm looking for is either we push up, we kind of tap into this area, and then we get the push down and the flag. Then obviously you can play this small range, and you'd be easily be getting in, yeah, with about 10 to 12 pip stop, and then you've got 3.5 to that low with a 12 pip stop. If you do manage to get in with a 10, it gives you, you know, 4.5 almost. So that's worth the risk in my opinion on that position, because we are in a nice key area. The only downside is obviously on the higher time frame we have tapped into a key value area here where we've moved off very aggressively as well, so we could continue to the upside. So obviously that is in the back of my mind. So if we do start to then move a little bit more aggressive on open, and let's say we do get that flag here and then we push up and then we get that next continuation that is sitting above that high, I don't think you can say no to that position, because obviously our next real target there is here, so there's plenty of room, and you can probably get in with a risk entry on the 15-minute there, which, yeah, like you're easily going to get in with about a 10 pip stop, and you can manage it more than likely, and it gives you 4.5 to that high, and then, which isn't really that far of a move. Like if we measure it, it's 40 pips, so it's kind of nothing. And then obviously if this is one to move a little bit higher, then you're in a beautiful position. So those are the two things I'm looking for on euro, dollar. Pound CAD, they're kind of all like in a very similar sort of area, these dollar, euro, pound related pairs. Pound CAD, so we've had all these highs over here. We've got this high that is now our most recent high and our highest high in recent times, so that's the one I'm focusing on. Price has, you can see here, it's got this 1, 2, 3. So I'm looking for this to continue up to tap into these highs here. But on the flip side, I know that last time we moved aggressively, the move started from here. Like we can see, we've had that impulsive price action there. So it's a possibility that price doesn't come back up to this area yet, and we move off from here. Gives you the continuation, and we've moved down to there, tapped into these lows, and then we start to turn around, and then you kind of get this expanding structure for the bigger short. So that's kind of what I'm looking at the moment. I'm not too bothered about this candle here, because that was just the last like 5-10 minutes of close on the Friday, so I'm not too fussed about that one. So if for looking for the short on this one, it's what I like about this is it's very simple. I'm either waiting for price to tap into this, and it gives you the 1, 2, 3, and you get your risk entry from there, or we don't get this structure and we just break below this kind of little area here, and then we get our continuation, and then you can short that because you've got enough of an impulse. You'll have like you look for a 1, 2, 3. You want it to be ideally below that low, which we are. So, and then when you measure that, let's say you get in with about a 15 pip stop, you can manage it quite easily. And then to the first target, you've got almost 10 to 1. So absolutely lovely position. And then, like I mentioned, on the flip side, you've got this potential long to come into play. So you can see that on the 4 hour. It makes a lot of sense. If we get this structure, it makes sense because it'll be fulfilling that high. And then, you know, you can measure this as well from the from the pole, from there to there. This is going to break quite a bit, so we could get quite an aggressive run to break these highs. So if I go back to the 1 hour, you could look for a risk entry in this area. And given the area that we're at, I probably would only look for a 1 hour risk entry here, and you could probably get in with about 18 pip, and then you've got almost 6 to 1 to the high. And obviously if there's no risk entry, and then we just wait for the push and we get the little flag, and then on the 15-minute you can get in with a risk entry, and you're looking at, yeah, maybe even if you do manage to get a 10 pip stop, then you're in an absolute phenomenal position, and you're looking at 9% to that high there. And obviously we measured by the pole, this could go quite further. So pound CAD, big fan, very nice, like that position. Aussie CAD, similar to pound CAD, we are in an area, so we can see that we've got this high where we sold off very aggressively last time on the weekly. Haven't really got there with any sort of structure as such. You can kind of see that we had this expanding, it's pushed up, gave us a little continuation. Not really going to class this as a like 1, 2, 3 because this is that correction is way too small. So what I'm looking for now is continuation to the upside or continuation to the downside. Now, first off, I think when I go to the 1 hour, you can see very clearly what the area that I'm looking for, because we know we're in a high value area because of how we sold off last time. So there's two things I'm looking for. If price comes back up and then so let's say we sell off a bit and then price comes back up, we break that high and we get that push down and then we get the continuation. So you've had a solid 1 hour push down. You could probably enter on the 15-minute. You're easily protecting with a 10 pip stop, because the only thing you need to protect here is your flag, because you're not really going to be looking to protect that high. And then you've got an easy, what's that, almost 4.5% to the low before you potentially pivot for the long. So that's kind of what I'm looking for on Aussie CAD at the moment. And then obviously if we do get that, and then price does break out and you're still in the position, and then we get a flag that's retesting the back end of this low, then and at that point you'll be below this low as well, which is key. Then it kind of becomes sort of floodgates are open situation. You're even set below this low as well, which is this high, sorry, which is really nice. And then obviously in that scenario as well, you're probably easily going to get in with a 10 pip stop because it's Aussie CAD. And all you need to do is protect above this high, because if the structure is retesting, and then you've got to this low here, just ignoring that one because it's just a big volatility wick. So in this scenario, let's say this does actually play out. You catch the first flag and you catch the second flag. That's 10. That's 5.5. That's almost 16% in just two small positions where you've moved from first entry to the end. Just 100 pip move, and that could happen very quickly. That could be a very quick move. So that's kind of what I'm looking for on Aussie CAD, mainly focusing on the shorts. I'd rather take the long for pound CAD because we have that high just sat above. With Aussie CAD, we kind of don't. This is kind of like the last area until we're looking up these, and then obviously up there. And then pound dollar, similar to euro dollar. You can see euro dollar's sitting into that high, pound dollar's sitting into the same sort of area. Daily, we started to see a little bit of stalling, smaller price action, like smaller candles as we kind of tap into this area, especially after that huge daily candle that we had in the middle of the week. This one is quite simple actually, because we are currently tapping into that high where we sold off very aggressively last time. We're looking at, what's that? That was two 4-hour candles. I'm sorry, 2 1-hour candles, which is even more aggressive. So yeah, I think this could be a Sunday night play really. If we get the push down Sunday night, and then you see that tight continuation just below there, and you get something along the lines of that. If it's manageable to the low, which it probably should be because it's pound dollar, you can probably get in with a 10 pip. That's on the 1 hour, so you might want to filter on the 15-minute. You've got 3% to that low. And then obviously after that, once we've broken these lows and we're forming continuations down here, then obviously, yeah, that's what we're looking for. We're looking for the shorts all day long there. But there is a potential that this could go long. So if we just remove this, and obviously this ends up slowing down a little bit, and we come up and we do create that, and we get a continuation here, you can see that we've got this larger continuation now sitting above this high. It's just a 1, 2, 3 to take you up to fill this and fill this. So again, but obviously if this does happen and we do get an entry within here, we can still take that, and we just manage it a little bit more aggressively in anticipation that price could pull back to create this larger structure to move higher. It's very nice. And that's my top 6 for next week. My wild cards. So I've got Euro Aussie, Pound Yen, Pound Swiss, Wheat, and Pound Aussie. A lot of pound pairs on watch next week. But looks of it, yeah. We've got 1, 2, 3, 4, 5 here. Pound Aussie. It was looking really, really nice last week. I've just kind of put it on as an additional now because we still have room to fill it into this low here. But I'm kind of not against this pulling back into a long. Because obviously we have this low here. We near missed it, and we've moved with a little bit of aggression. So if we do end up breaking that low and we pull back in with a bit of momentum, you can kind of play that long. You'd be looking for a risk entry within the structure, so you can kind of mitigate risk as quickly as possible. But let's say you get with a 20 pip stop. You know, if you're looking for your target to be this high and it's just kind of this range before it starts to look for the short, you got a 7 to 1 there with a 20 pip stop, really. Or 19 pip stop, but you can, you know, if you manage it, we're on the 4 hour here, so you can probably get in a lot tighter. Like you get in with like a 13 pip, so you're looking at 10 to 1 to that high. So that's one of the forecasts that I'm looking for. But we getting a little bit of momentum on the 4 hour. You can see these, and then I was thinking if price does just end up breaking this, and we kind of come back and we just retest kind of this general area with these two lows, how could we take that position? Well, you'd on the 15-minute you'd be looking at potential risk entry. Ideally, you'd probably want it a slightly larger flag, something along the lines of that, just for a little bit more depth, a little bit of more confirmation from the market, kind of like a nicer sign from the market to show you that this isn't going long, and we can potentially play this short. So you can probably get in with a 15 pip stop there, because all you need to do is protect above this little area, this low and this low, which you would be doing, and then that gives you, you know, almost 6 to 1 to a low. And obviously, if this ends up breaking, then we're looking at these lows down here, but. So that's why I've got it on as an additional, just because it's got potential for next week for the buy and the sell, which I always like when you have both counter plays in motion kind of at the same time. Makes you think a lot more, and it's more interesting trading that stuff, that type, those pairs. Pound Yen, I brought this on watch just because we are in a very, very, very high value area. Apologies. And we've pulled back very sharply in the last 2 weeks, as we can see, but we are now just sitting above this where we sold off very aggressively last time. I'm not super interested in this coming up to fill the wick at the moment, but it's a very simple one. This one, I want to see price kind of completely drop through, ideally trading below that little correction there. Just ideally, yeah, it's just drop through, and then you've got your 1, 2, 3. And then you'd be looking for a risk entry within there on the 15-minute, filtered on the 15-minute. You'd probably look at about 17 to 20 pip stop on that. And then obviously you'd be trading it to that low, which is 10%. So you'd in that scenario, you would just mechanical management to the 90% rule, and you'd get away with, you'd be looking at about almost 9%. So in a short move like that, and we know how aggressive it can be, even on these moves up, it's been quite aggressive, because obviously, you know, we had this sharp move up here, then we sharp move back down, and then even this has been relatively decent in terms of its impulse in comparison to what we've got over here. So yeah, that's Pound Yen, simple short. Pound Swiss, I've brought this on because we're in the middle now of two key areas, as you can see on the weekly. Big momentum at the end of last week, so I have a feeling that this is going to take out this area here, and we can see that we've had this 1, 2, 3, and I feel like it's just one of those typical ones that's going to kind of break out and then break back in if we do get it. So I'm looking for price to just kind of continue up, because obviously the structure here that we have on the left, the 1, 2, 3, still intact, because we haven't moved that far. So if we do get something like this, and then you get your 1, 2, 3 over here, something like that, and remember we're on the 4 area, so this is quite a bit of time, and that's it's a decent sized structure. You'd be looking at Yeah, that's 20 pips. So again, we're on the 4 hour. So let's say you do get in with like a 15 pip stop. That's plenty of room to manage this, because obviously down to that area, you're looking at 20%. You're probably not going to hold that entire move. Down to the first key sort of point, you're looking at 13%. So it's a nice position to take. It's nice to have on watch. And then obviously on the upside as well, given the fact that we've had so much momentum on this last leg up, if we do end up breaking above this ray line, because obviously we know this ray line is our last sort of high area until we get to these sort of areas, which isn't, they're obviously not as, don't have as much confluence behind them as these sharper moves. If we do end up moving again aggressively into next week, and you get 2 daily candles, and the next thing you know is price is up here and it's forming continuation, like so, there's no reason why you can't take that long. It's a I mean, you can, yeah, there's no reason why you wouldn't look to take that long if we started to get a continuation above those highs. But I do prefer the short on this. Wheat. Now I've got wheat on watch because of the weekly. I think the weekly looks stunning. So I'm just going to jump to the daily for a second. So you can see that we've got this kind of like sharp hook point here that's on the daily. Not so much visible on the weekly, but on the weekly we have an absolutely beautiful high test, bearish high test, weekly bearish high test. Very, very nice. Could be strong signs for that candle next week, where we sell off and kind of negating the move of the previous week's bullish price action. So that is what I'm looking for on the high time frame. On the lower time frame, now I think a lot of people, and I might be wrong about this, but in my experience and what I know, a lot of people could be looking at this as your impulse correction to move higher, and I completely understand that. But if it was going to do it, it was going to do it last week, because we had the 1, 2, 3. You can see that very clearly there, and then we never created that double bottom. That is, for me, that's the last line in the sand, right? So you've got your first entry here with a 1, 2, 3. You can kind of see this is your middle section. We scoot back up. That's your, this is your first entry if you were going to take it here in the plays that long, managing to those highs. We never got that. Well, we did get that, sorry. But then obviously we pulled back. So next play is your double bottom. You got the scoop double bottom bounce just because obviously price needs to tap into that area to gather more orders. That's what we were looking for, but we didn't get it. So what happened? Price is now trading below it. So is that a sign from the market? Well, yes, it is. And obviously we do have these areas to the left that we need to acknowledge. But what I'm looking for now is if price gives a very deliberate 3-tick structure, and even better actually, let me realign that. If price gives you that, and you can see that price is retesting the back end of this high, this no longer looks like a long, does it? This looks like a failed descending structure, a failed double bottom scoop to go long, and we've impulsively broken below this low, and we've retested it with a 3-tick structure. There's no way that you don't take that for sure. There's no way you're looking at the long there. And then you can get in with a 25, 26 pip, potentially 30. And then to the low of the structure, you got 4 to 1, easily manageable within the structure. Like you should be. That is a really, really nice position, in my opinion. I love that. I think the weekly just gives me that extra confidence as well, because of that. It's very, very nice. And the beauty of it is we whipped through and not to this area on the weekly, which is really, really nice. And then my last one is Pound Aussie. Pound Aussie, I had on watch last week. It was looking really, really good, but it kept teasing. And so you can see that we've got this really, really nice momentum. We're into this now daily structure, because we've been there for so long now. And obviously, we're looking for this to drop out eventually to those lows down there. And then basically what I'm looking for now, the reason this is on the additional now is just because I'm going to drop down to the 1 hour here, is because we have near missed this high now. So we've got this high here. We've near missed it 1, 2, 3, 4 times now. So it kind of loses a little bit of its weight because it's been so often, it's been so much, which is why it's now an additional and not in my wildcards. But essentially what I'm looking for now is price we just continue to follow through, and then I'll look for continuation below. Or we do end up pulling back, and that is, we finally get the break of that high, and then I'll be looking for continuation below that high there. I have thought about whether or not you would take a continuation within here, the fact that it's failed to break it multiple times, that it might just not break it and we might just end up down here again. But for me, it's not worth the risk in this moment of time, so I wouldn't take that position. It's kind of one of those ones where, you know, if you've got a very, very obvious 3-tick structure there, you've got kind of momentum, it's not the greatest, maybe sort of retesting the back end of this, you could take it, I'd understand it, because you know, you're looking at this as well, like you've got kind of this like messy 1, 2, 3, not really got a middle section. I guess that would be a middle section, and you've got this 1, 2, 3 up. It's not the best, but if you were up maybe like 10%, then I could understand why you'd want to take the trade just for, you know, for the fun of it really, but you just wouldn't. But yeah, so that's what I'm looking for on pound Aussie. So just to recap, Euro Kiwi looking for the short, larger continuation or V shape. Aussie dollar looking for the long or the short, tapping into these areas or trading below. Euro dollar, same thing, tapping into these areas or trading below, tap above, flag long. Again, I forgot to mention that. We could look for the long on Aussie dollar as well. Pound CAD, potential short-term short into this low, counter play for the long, or break of the lowland short. Double top, tap, push down, flag, or below the low. Similar, yeah, same as Euro dollar. We're in the area, push down, flag, potential long though, counter play. Obviously, if we break the low, then second continuations below. Euro Aussie, break below, very obvious, looking for a very obvious flag, retest of the back end, or break below, push back in, strong 4-hour, push back in, 15-minute flag. Push down, significant push down because of the messy price action, trading below that area, 15-minute flag. Pound Swiss, tap into the area above because of the momentum, strong 4-hour turnaround, 15-minute flag, 1-hour flag filtered on the 15 minutes, sorry. And then wheat, I am looking for a 1-hour structure to pull back, filtered on the 15-minute, retesting the back end of that low for the short. Pound Aussie, tap above that area, push back in, 1-hour flag, filtered on the 15-minute, or price breaks below these lows, and then we look for the continuations below there. And that's it. Thank you very much.